Hi, Investor Nation, Crypto Nation, and Tasty Nation. Today I'm going to talk about how to trade crypto strategically. So what do I mean by strategically? Well, I'll get to that. But let's pop over into my trading platform, which is one of the mainstream brokerages in Canada. It's pretty much the only brokerage in Canada that you can use. If I was in any other country, especially the United States, I would just use Tastyworks. And with Tastyworks, you can also trade cryptocurrencies. But we are still waiting for Tastyworks to come to Canada, after which all Canadians, I'm sure, will just switch to using Tastyworks because it's the best. Okay, so let's pop over into my IB platform. Down at the bottom here, I've got all my Bitcoin-related products. So I've got the Bitcoin futures price itself. That's trading at 32,000 right now. And I've got a few other crypto-related products. Riot, which is a company, so it's a stock. Mara, Coin, which is Coinbase, and Block. Please let me know in the comments section if you have any other crypto-related stocks or ETFs you like to trade. I like to choose the ones that are the most liquid. But as an example, let's look at the Bitcoin future. So when I click the BRR here, the infinity symbol means it's the continuous contract. So it's the front month contract, which is expiring July 30th. There's the chart there. And if I wanted to buy this, I would just right click and go buy, put in a limit price. Oh, it says I do not have trading permissions to trade this. I never got around to requesting those. I don't know why I would need special permissions to trade a futures contract. But anyway, I'm not really interested in trading the future itself because this is a big product. I think this is 1/10 the size of a Bitcoin, but still, I'm not interested, and I'll show you why in a second. There's no options available on the future right now. When there are options available, I'll be all over this product, and I'll definitely put out a video at that point. But as another example, let's look at Coinbase. Coinbase is trading up in the 200 range. If I was to buy 100 shares of Coinbase, you'll see here the margin requirement on that is about $6,700. This is a little bit of a big product for me as well. This would be $22,000 in notional value, but I'm putting up $6,700. This is why I prefer Riot. So we know that Coinbase and Riot and Mara and probably a few other equity products are going to be highly correlated with Bitcoin. So that's why rather than trading Bitcoin futures itself or the actual cash Bitcoin using a crypto account, I'd rather just do it on one of these mainstream brokerages like Interactive Brokers and trade a safe product that I know where my money is going. And I know also that Riot is highly correlated. So if Bitcoin goes up, Riot's going to go up. And if Bitcoin goes down, Riot's going to go down. This blue cone here is called the expected move cone. So this is actually showing me where the market is expecting Riot to go over the next period of time. Whether I want to look at the next few days, few weeks, few months, whatever, this is actually showing me an expected move. So the expected move means that the market, so all the buyers and sellers in the equity and options market make up all the bid-ask prices in the options chain, and they actually predict 68% of the time successfully where a price of a stock is going. So whenever someone tells you that they think they know where a stock price is going, just check the expected move cone and see if it's a reasonable prediction. If it doesn't fit within this cone, then it's probably not going to happen. The market is right 68% of the time. That's one standard deviation is 68%. It's really easy to calculate. So if I wanted to buy 100 shares of Riot, it's trading at 28.08 right now. I'll go check the margin requirements on this. It's a $2,800 notional product, so a lot smaller than Coinbase. And I actually have to put up full margin on this. I have to actually put up $2,800 to buy 100 shares of Riot, valued at $2,800. So that means that there's no margin relief on this product. Interactive Brokers is not giving me any leverage. I'm not getting much bang for my buck doing it this way, but I could go ahead and do this if I was bullish Bitcoin and therefore bullish Riot. The other thing I can do is just sell 100 shares, check the margin on that. Again, it's a $2,800 notional value, but it's only asking me to put up $2,200 now, so it's a little bit less going short than long for whatever reason. That's up to the brokers to decide that. What would be the problem with just buying or selling Riot here? The problem is, in my eyes, there's nothing strategic about doing that. You don't really know whether the price of Bitcoin is going to go up or down in the near future or even the distant future. It's just a guess, right? And that would be like a buy and hold strategy, just to buy 100 shares and hope you're right in the long run. Well, there's nothing strategic about that because you can't put a probability around that. You can't run a business around that. It's more like buying a lottery ticket and then sitting back and seeing what happens. It's a more passive approach.
Like, that's not what risk taking is all about. That's why we couldn't participate, because to catch an outlier is, it's not something that you can predict or plan or anything like that. To me, that doesn't fall in the category of risk. That falls in the category of like buying a lottery ticket or something else. And it's a phenomenon. Yeah, it's a phenomenon. That is not where success comes from. Just so we're clear of that. That is not how you build a successful business, or that is not how you create long-term success. I mean, when you look at the number of players and the amount of people that actually walk away with something from that, the number is so small, you've got a better chance of struck by lightning.
But now I'll offer you a different way of trading Bitcoin and Riot. I'm okay with people who do that, but personally, I'd rather be more strategic. So I'd rather know what's the probability that I'm going to be successful on one of my trades. So you can do that using options. So let's open up the options chain for Riot here. You can see I'm already in one of these strikes here. I'm short the 24 put, and this is looking out 28 days to expiration, which is the next monthly expiration, August 2021. But as another example trade, what would happen if I, instead of buying 100 shares, I still want to be bullish on Riot in this case. Not that I know whether it's going to go up or down, but I just want to be strategic with what I'm doing. And by strategic, I mean you can have a predictable outcome. If you just buy and hold, there's nothing strategic about it. You can't really run a business. You can't pay the bills consistently doing that. You're just taking a shot. You're stepping up to the bat, but you're not necessarily going to stay in the game for a long time. I want to stay in the game for the long run. So what would happen if I instead sell the 25 put? So because it's around the 30 delta, I know my probability of profit on that trade is going to be around 70%. The bid ask here is 186 to 10. So I'll just put in a price at the mid price here. And look how much buying power it's taking right now. Look at the margin impact. It's only costing me $737 to control 100 shares of Riot. So right away, you can see the advantage to selling a put versus buying stock. It's more capital efficient, right? So my brokerage is only asking me to put up $737 to control 100 shares of stock, which has a notional value of $2,800. This is, in my opinion, better and more strategic than just buying stock. Now let's look at the probability of success here. The platform tells you exactly what it is. It's actually 74%. I was estimating 70% just by looking at the delta here. So around the 30 delta, the opposite of that, or 1 minus that, would be 70%. But it's actually telling me it's 74%. It's actually taking into account the credit I'm receiving here. So for anyone new to options, this 1.98, you multiply that by 100 because this represents 100 shares. And this is actually a credit of $198. So I'm collecting $198 and putting up only $737. So if this put expires out of the money, I keep that $198. This is actually a really great return on capital. And this trade is only out to August 20th, or 28 days away. So my return on capital there, $198 divided by 737, I'm getting about a 26% return in just 28 days if this trade works out. And I'm not saying it will for sure, but I've got a 74% chance that this will work out, and I will keep that $198. This is what I mean when I talk about trading crypto strategically. I'm still trading something that's tied to the crypto market, that's highly correlated with Bitcoin itself, but I'm doing a strategy that's a high probability. And I can actually run a business and pay the bills doing this. This is what gets me excited. This is what gets me up in the morning and gets me to look at the financial markets whenever they're open. Okay, so what kind of risk am I taking on this strategy? Even though I'm putting up just $737, the risk I'm actually taking is the max loss here, $2,300. So what does that mean? That's if Riot goes to zero. If the company Riot becomes absolutely worthless, and you can probably guess that there's not a high probability of that happening. It actually says there's less than a 1% chance of that happening. I would lose that full $2,300. So even though I'm only putting up 737, there is a certain amount of leverage involved where I'm not putting up the full amount. I don't have to cash secure that put. So again, this is strategic, but there's a very small chance that I might lose that money. So I'm not going to do this with a huge portion of my trading account or my investment account. I want to be smart with what I'm doing. And you can check out my other videos to see how do I allocate certain funds in my account to make sure that I can stay in business day after day, year after year. This performance graph that is showing here, this is not a really great graph. I'm going to put up another one on the screen that shows that as long as Riot stays above $25, and right now it's trading up at 28, I will win on this trade. In fact, my break-even price is actually down at 23.1. So actually, Riot can go down several points by expiration, and I will still win on this trade. This is what I'm talking about being strategic. I don't have to be necessarily right on the direction of this trade. Riot can go down, and I can still win. This is the power of using options. This is what gets me so excited about using options. So what am I actually doing in the options marketplace when I'm selling this put? Well, if I'm selling a put at the 25 strike and the stock is trading at $28, what that's saying is I'm willing to buy 100 shares of Riot at a price of $25, even though it's trading up at 28. And the marketplace is willing to pay me $198 to do that. So that's why this risk graph looks like this. This means that my break-even price is down at around $23. That means I'm effectively buying shares of Riot at $23, even though it's trading up at 28. This is a good deal, as long as you're bullish on Riot. If you were bearish on Riot, well, then you wouldn't be selling a put, you'd be selling a call. But even if I'm wrong and Riot does go down a little bit, I'm still good down to a price of around 23. And if I want to accept delivery of those shares, I will take delivery at a price of 25 and still keep the premium of $198 for 100 shares. And if Riot goes up and stays up above 25, then I just keep that $198 and I don't buy the shares. So it's a really good use of capital to use options to do this trade. It's very strategic, and you can actually predict the outcome on a bunch of these trades. If I did 100 of these trades or even 1,000 of these trades, I would know over time that I actually hit those probabilities pretty close. That's just how an efficient marketplace works. The numbers will tend to work out as long as you have enough occurrences. So if I just close this and I click this advanced button here and click on margin performance, it's showing that same performance graph there. But on the left here, it's showing what's the estimated commission. The commissions are variable in Interactive Brokers, but the highest commission I would ever pay on this is $1.56. So I'm paying $1.56 in commission to make $198 maximum profit. That's if I hold to expiration. And there's certain reasons why I wouldn't hold to expiration. I might actually aim for half of that. So I would actually aim for about $100, which is still a good return for putting up $730. And if you want to understand why that's part of my strategy, check out my video on the Tasty Trade mechanics, which I'll put a link to in the show notes. I'm going to go ahead and transmit this order. And if I get filled, that will be adding to the position that I already have, which is short the 24 put. So just a bit of diversification in the strikes there. So my personal strategy is that once I get down to about 21 days to expiration, I will roll that position to the next month, which is September, which is 56 days to expiration. Oh, the market's just closed and they turned off all my data. Nuts. I guess I'll have to wait till Monday to have some more fun.
Turn those machines back on! Turn those machines back on!
All right, well, have a great weekend and thanks for watching.